A very good afternoon. Hello and welcome to CNBC-TV18's Mumbai Newsroom. I'm Ekta Batrani. You're watching your stocks this Friday afternoon. Well, it's turning out to be a session where we are seeing the mid-caps outperform on a week-to-date basis. At current reckoning, the mid-cap index is already up around 2%. This is compared to a completely flat performance for the Nifty on a week-to-date basis. So overall, turning out to be a good session for the broader markets. Remember that there are a whole host of result reactions this afternoon as well. So we'll be talking about a lot of stocks, answering a lot of your queries in context of news as well as earnings. Joining us this afternoon, we have Vijay Chopra of EncoVentures.com and Rahul Sharma, market strategist, head of research and development at Equity99 Advisors. Afternoon, Vijay, as well as Rahul. Welcome to the show. Let's get going in terms of the couple of queries that we already have lined up this afternoon for you. First up, Ravi Kumar calls us from Bangalore with a question. He has investments in Wipro. Hi, Ravi. Afternoon. Ravi, is my voice reaching you? Okay. All right. So it is an SMS. It's a buy price of around 454 and a quantity of around 600 odd shares. He's currently sitting at a bit of a loss at this point in time. Rahul, let's toss this over to you because a couple of the IT stocks are now coming back a little bit simply because of a possible defensive play, considering what has taken place in terms of the markets on an overall basis in the past couple of weeks. In that context, what would you suggest on Wipro, and do you think it'll probably get back to those 600 levels?
Good afternoon, Ekta. For Mr. Ravi, with Wipro, the chart structure is weak and have a strong supply zone near 430 levels, which is its 200 EMA on daily charts. So I think he should take exit at any bounce near his buying price level and switch the investment into either Infosys or TCS, which looks more promising compared to Wipro at current levels on technical charts. So I think he should wait for any bounce and he should take exit and take entry into better Infosys or TCS.
Okay, so you would recommend an entry into Infosys or TCS. Vijay, what would you recommend on Wipro? It's not moved much.
Well, yes, it has definitely moved on the lower side. Just a correction, my company's name is Enoch Ventures, for your future reference. So I think that, Wipro has been nicely consolidating over 7 months. So I think that it will definitely show a spurt. And this gentleman who has entered around 450 can probably average at these levels because, technically speaking also, this stock is, about to make a golden cross also very shortly if it moves the same way and doesn't crack further. So I think that, it's not one of the stocks which can be exited because we have seen some of the stocks like HCL, Persistent Systems, and some of the companies, even TCS, already moving up, but Wipro hasn't. And Wipro also is a behemoth, mind you. It's a large company. So I would recommend that just keep on holding, maybe average at these levels, bring your cost price down. And there's a good chance that, once it starts moving, it will definitely cross 500 odd. So I think it's a hold.
Okay, all right. You think it's a hold, maybe averaging out at these levels also would be something that you would consider, and apologize for the pronunciation of your venture, Vijay, but those are the Abbott numbers on the screen. Net profit up around 20% plus on a year-on-year basis. We do have revenue, which is up around 8.3% on a year-on-year basis. So good performance actually coming in for Abbott. As you can see, the stock is up around 2% at this point in time. EBITDA too has expanded to over 300 odd crores. But let's get to another query then. We have Tushar Sinha, who writes to us from New Delhi. He owns around 150 shares of ONGC, which he's bought at around 300. He's a medium-term investor and he wants to know whether to hold or sell his shares in ONGC. Well, Vijay, it's been a steep correction for Tushar in terms of what he bought ONGC at and where it is currently. So what would you recommend on it, and your time frame as well?
Well, I think that ONGC, if he has bought at around 300 levels, must be years ago. And it won't be a bad idea to average it at these levels. My sense is that if ONGC starts moving, it can definitely go up to 180 to 190 odd levels. And there probably he can exit. But yes, he should average around these levels. I don't think that there's much downside in ONGC. It's a good dividend-paying company, Government of India company. And the charts also suggest recently a golden cross was made So I think that it has the potential of going up to 180, 185. But yes, he needs to average out at these levels. No need to sell.
Okay, no need to sell. And another average call coming in or an average out call coming in from Vijay. First was the call on Wipro and now on ONGC. But Rahul, what would you recommend on ONGC?
Yeah, I would go with Mr. Vijay here. This currently the stock is trading near like almost half price from the purchase price of Mr. Sinha. So right now he should actually average out his position at near to 150 levels. Upside, very correctly said by Mr. Vijay, 180, 185 or maybe 190 levels will act as a resistance point. And once it crosses it may reach to higher levels. Where he can take like exit or invest into some better quality stocks or better invest into PSU banks like SBI or Bank of Baroda. So I think right now he should average out his position.
Okay, Rahul, since we were talking about earnings, I just wanted to ask you about Abbott. And if you look at that stock, it's been a good performance from them this quarter.
Which stock are you talking about, Ikra?
Abbott.
Abbott. Just
Correct.
No, actually, I'm not getting the chart right now.
Okay, Abbott India is the one that I'm talking about from the pharmaceutical MNC space, came out with a good set of numbers. Yeah.
See, but the thing is that the company has been delivering a good profit growth around of 23.6% CAGR over the last 5 years. And good return on equity of around of the records of 3 years, 28%. So I think right now this particular quarter has not been shown as great, but I think in coming days it may get approved. The cons for this like Abbott India will be like the stock is trading at around 16.4 times of its book value, and the delivery or sales growth has not been good in last 5 years. So we have to see more quarters coming up in future.
Okay, all right. So that's the call coming in on Abbott. Let's get to another query now. Amol Deshmukh writes to us from Mumbai. He wants to buy 1,000 shares of Redington at around 170 to 175 rupees. He's a medium-term investor and he can hold the shares for, say, a time frame of around 3 to 6 odd months. He wants to know whether that would be a good buy or not. Vijay, I'm going to toss that one to you.
Well, I think that Redington definitely can go up to 190, 200, and that's it. There are scores of companies where he can invest at this point of time. You know, there are wonderful companies like Grasim he can get into at this juncture. Coal India looks wonderful. Hindalco looks wonderful. Tata Steel looks wonderful at these levels. So why Redington? Because Redington anyway is far away from the 200 DMA as well. So I think that, you know, if you've got gold available at a discount, why to go for silver? So better get into some good large cap names. I think technology also offers companies like LTTS. I like L&T Technology Services. So he can buy these companies. So Redington as such, there's not much juice, maybe another 20 rupees or so. But again, I think that if somebody is here for a longer term, so there are good options available in the market.
Okay, all right. So Redington is not something that Vijay would recommend in terms of buying. There would be other options available which one can look at. But Rahul, would you share that view on the fundamentals of Redington as well?
No, I think, right now, Mr. Amol Deshmukh is looking just for investment of 3 to 6 months, which can be really fruitful for him in Redington. It has the potential to give decent returns in 3 to 6 months. Although it is into consolidation phase right now, but I think as soon as it crosses 190 levels, the stock has got good potential to reach 200 plus, 210 plus levels. So he can keep a stop loss at 170 for Redington, as it looks like a strong support or demand zone on technical charts.
Okay, all right. The stock has gone up around over 20% in the past couple of months. So do watch out for Redington, currently at over 180 odd rupees. But Manjeet Kaur Soni, she writes to us from Punjab. She holds 100 shares of Engineers India, which she's bought at 100 rupees. She's a long-term investor. She wants to know whether she should hold or sell this particular counter. So EIL, her buy price is at 100 rupees. The stock is currently at around 80.95. Rahul, what would you recommend? Is this a hold for a long term?
See, I think this particular stock or counter, it has got a major resistance at rupees 90 levels. So unless it goes above this resistance zone, it may continue to trade sideways. So either like hold or you can also withdraw and enter into stocks like L&T as recommended by Vijay sir as well from the same sector, or switch investment into PSU banks like Bank of Baroda or SBI for long term. That would be a better choice rather going than for Ingenious India.
Okay, all right. Vijay, do you want to come in on the technicals for Engineers India?
I think that, this stock can go up a bit. I think that maximum 90. So that would be the point where one should exit. And, any stock which is trading far above the 200 DMA or even 50 DMA, I'm generally not comfortable. So I think that it can give you another 8-10 rupees, and that's it. You should exit and get into some other fundamentally strong story.
Okay, all right. Well, it did come out with numbers around a week back, 5 to 6 days ago, and it was a sharp dip in terms of the profitability for Engineers India as well. Well, that's the update coming in on a couple of queries. We need to take a short break, but stay tuned. We'll be answering a whole host of your questions on the other side. Welcome back. You're still tuned into your stocks on CNBC TV18. A couple of more broader market stock reactions. As you can see, rate gain is up around 3% odd. Revenue is up around 11% odd on a year-on-year basis. Net profit is up around 1.5% on a sequential basis. The stock is up around 2.3%, reacting to what has been a good set of numbers on a Q-on-Q basis for them. In fact, we should probably also try and pull up Alkem for you, because they did show a strong margin beat this quarter from the pharmaceutical space. So maybe that stock should come up for you. Margins came in at around 19 odd% this quarter, and this is versus estimates of around 15 odd%. And remember that the US did benefit them in terms of a strong flu season. So that's maybe one of the reasons why the stock is higher. A good performance from the US, and hence the margins have done better for Alkem this time as well. But we still have our guests with us. We have Vijay Chopra joining in and he's going to be talking about the fundamentals. We do have a couple of queries as well, and Rahul Sharma is here on the technicals. We do have Jay Mehra, who writes to us from Mumbai. He holds 150 shares of M&M, which he's bought at around 300 rupees per share. He's a medium-term investor and wants to know whether to hold or sell that particular stock. Well, M&M is marginally lower after reporting its Q3 numbers just a couple of hours ago. Technically, Rahul, that stock has outperformed entirely. Do you think it has more to go, and what would your recommendation be?
Yes, I think firstly, I would like to congratulate Mr. Mehra. He did fantastic investment and kept it holding with patience from so long. So I think now for MMM, he should remain invested. The company is doing great business. And technically also the chart structure is very much positive and near to its breakout zone, which can take this stock to around 1500 plus levels in coming days time. So I think he should remain invested and keep trailing the stop loss, which is currently placed at 1200 levels.
Okay, all right. And Vijay, on M&M, did you like the numbers that they reported this time? And do you think that this performance can be continued going into FY24?
Well, I think the performance has been more or less stupendous, and the kind of models this company has launched. Look at XUV 700. You see a lot of them on the roads. Even the new Scorpio and other models, Thar. In the last 2 years, the company has redefined the way it used to be, and that's a very clear reflection which we see in the stock price as well. So my sense is that this is going to go on, as there is still a huge waiting line on the models Mahindra is offering. So 1500 is quite a good possibility in this stock, and I would recommend a hold.
Okay, recommend a hold in terms of the M&M investment, and it is a strong gain that they are sitting on as well. The buy price is at around 300 odd rupees. But let's get in another query now. We have Rakesh, who writes to us from Hyderabad. He holds 500 shares of Radico Khaitan at over 600 odd rupees, and he's a long-term investor. He wants to know what he should do with the stock, whether he should hold it, whether he should cash in terms of profits at this point in time. Vijay, what would you recommend?
Sorry, I missed the stock, ma'am. There was some audio issue.
Radico Khaitan.
So I think that, I would recommend for all the liquor companies. We saw, UBL getting damaged today. But again, I think that the main reason is the ethanol sourcing these companies are doing from sugar manufacturers. The prices of ethanol have gone up. There were days when ethanol was not used at all and they used to get it at a pittance. But now since the ethanol blending is going on in petrol and diesel, most of the OMCs are buying from the larger sugar companies. So ethanol is coming at a decent price. And the availability is also an issue. So the price is not, again, the profitability is not to that extent where it used to be. But again, I'm sure that, these companies would bounce back very, very fast. Radico looks good on the charts. It can still go back to 1250, 1300 levels. So for 1300, I think Radico can be re-entered, or somebody is having, so they can exit.
Fundamentals, Rahul, what would you recommend on the technicals of Radico?
Actually, I would like to congratulate Mr. Rakesh. He took right decision and has been rewarded as well. He has made investment near 615 levels. So almost the investment value is double now. I think technically structure is very much positive on charts, and I think he should keep trailing the stop loss level. Currently, it should be placed around 1,000 rupees, and on the upside, it has got huge potential, as said by Mr. Vijay, on and as well as on technical charts. 1,300 plus levels looks good. So if liquidity is not an issue for Mr. Rakesh, then there is no point of exiting. He should remain invested, or anyways, the investment value has gone double. So he can sell the 50% investment into it near 1,200 levels. By that, he will pull out the investment value, and the remaining can be kept for the long-term profit without any cost.
Okay, all right. So a bullish call really coming in on Radico, and that's really the power of sticking through and being a long-term investor, and probably to a certain extent getting the call right as well, choosing the right stock and staying invested in it. So congratulations and kudos on that. But let's get to another query then. We have PC Achaya, who writes to us from Bangalore, holds 125 shares of IRCTC at 550 rupees. He's a medium-term investor and wants to know whether to hold or sell that particular stock. 645 rupees currently for that particular counter. 52-week high for IRCTC stood at around 857 odd rupees. He bought it near the low of around 557 odd. So he is sitting in the money on this one. So Rahul, what would you recommend?
My recommendation would be the technical structure of the stock is looking like somewhere it is into pressure. And since it has gone below its important moving averages, it may consolidate more. Until it come above 680 levels, it will remain weak. So if you have a good time horizon with you, so remain invested for more gains. Keep a stop loss at rupees 620 levels and keep trailing it as it go higher.
Okay. And Vijay, what would you recommend on the fundamentals of IRCTC? Would it be possibly cashing in on the profits now?
I think that it is one player which has a monopoly, and any monopolistic player generally does well over a period of time. We saw that the valuations became irrational, and we have seen a wonderful correction also in the stock and consolidation. So I think that this stock should be held on to. There's a good possibility. There's a gap on the charts at around 705 rupees. So I think that it should go up to 720 very soon. And once it does, I think that he can book partial profits and wait for the stock to inch up to another 750 or 800.
Okay, all right, Vijay as well as Rahul, thank you very much for joining in and answering a whole host of queries, especially from the broader markets, considering that we've had so much news flow. Thanks again for joining in, and wish you a great weekend as well. Well, on that note, we need to wrap up on your stocks, but before that, we'd like to thank our viewers once again. We have beaten all competition on budget day with an 89.8% viewership throughout the day. And we have also emerged the leader with 88.2% viewership during the Finance Minister's speech. A big thank you to our viewers for your continuous trust and patronage and keeping it with CNBC TV 18. Indeed, a proud moment for all of us here at CNBC TV 18.